Welcome to DECODED, Series 1, Episode 6. Your weekly podcast providing in-depth insight into cybersecurity. Show notes including any links mentioned in the show are available at decodedcyber.com. In this episode, we're focusing on the basics of managing risk. We're going to talk about insurance, about assessing the risk of anything, from dropping a cup of tea on an expensive server to mitigating the risks of animal attacks. We'll touch on ransomware and try to look at the issues from the perspective of executives in large organisations and founders setting up their own startups. So where do we begin? I'm Simon Edwards, CEO and founder of SE Labs, the leading security testing lab. I've been advising on security for over 20 years.
Hi, I'm Mark Briggs, with over 10 years experience as a British Army officer and 5 years in cybersecurity. I'm now the COO of SE Labs.
Security for startups, and why there isn't much official advice. Because we've done the ISO 27001, which doesn't give you practical advice really, it gives you kind of a framework to work on. And we've got Cyber Essentials, which we've talked about, and there's a new-ish thing called Cyber Aware. But it's all very general and quite high-end.
Yeah.
So I thought maybe, seeing as we've done a startup or two, and we're very sort of security-focused, we could probably offer some advice to people.
Yeah, and I've had emails only this week through our website asking for information for startups and small medium businesses and whether we provide that advice and what the advice is, where to go. And so the demand is out there for that advice.
I think the demand isn't being satisfied because there isn't much money in it. We can do a podcast and tell people what they should do, and it doesn't really cost us anything, and no one's paying for it. But I wouldn't want to set up a business trying to provide security consultancy to small businesses because there just isn't the cash, and certainly not for the startups.
No, as a startup, I guess if you're taking an investment and building your company as fast as possible, you have to, again, it's just a matter of prioritization, and you're working at such a pace that are you thinking so in such a focused way about implementing the right security protocols, or do you just making money, turning over the business, and doing what you need to do, but without the breathing space to think about what you should do?
Well, there was one legal startup we talked to a few years ago where the guy was using his personal iCloud account for everything to do with the business. There was no sort of wall between his personal life and his business life.
Yeah.
And you could hack an individual and get their bank details and mess with their life, but if you can also get into their business data and their IP for their startup, then wow.
Yeah, but no one ever thinks it's going to be them.
No.
Everyone's always got a justification as to why they don't need to invest so much time or effort or resource with security. Whether it's why would anyone target us, or we're too small an organisation to have been noticed, or people are applying security practices that they were aware of a number of years ago, which may have been sufficient back then, but now they can be bypassed quite easily.
Well, there's some really old advice, that keeps coming up because journalists will read old articles and regurgitate about passwords. So changing your password every so often used to be the de facto advice. Yeah. But everyone that was interested and paying attention realised that people would just make their password 1 today, and then next time they change it password 2. Yeah. So even like the UK government's websites and things now say changing your password every month is silly, don't do it. But people still put articles out about you should do this. So I thought maybe we could talk about things like cyber insurance, because that's about threat mitigation. But also, before we get down to some real practical tips and ways that you can create strategies for your security and plans and things like that, the ISO certification that I think we've talked about before, I think if you're a startup, it would make a lot of sense to pay attention to it early on. And I don't mean you should get it. I don't mean you should go through the expensive process of getting it. But have a look at what you need to do, because if you do some of those things anyway, it's a really good idea. And then when you come to do an ISO certification, the 27001 one, then you're ready for it.
Yeah, it's all to do with scalability, isn't it?
That's true.
It's not a new concept when you're building a business to put in infrastructure in any department, and cybersecurity is just one of them, or security in general. It's not just cybersecurity, security in general is one of them, and it's all around making sure that doing more than just getting by. You've got 5 members of staff. Well, you've all got multiple crossover responsibilities, but if you start to introduce a structure to a business that at that stage, and policies in place, when you become a 500 staffed business, you can just expand the policies you've got, and you aren't reinventing how you work as a business. And the same, and your ISO example is a good one in that respect. If you start your file management and your security protocols in line with the advice and the questions that come alongside the ISO 27001, when you are building your business, you build it with a framework that you will have naturally completed the ISO qualification when you come to want to be tested in it, or you get asked by a client if you are ISO compliant.
And you don't have the politics that when you're a small company, you don't have lots of stakeholders all arguing over how a policy should be written. When it's 2 or 3 of you setting up a company, you just decide it, and then later on, as you scale up and heads of department want things changed, it's kind of harder for them to change it. And we know people who have gone into large retail organisations and tried to get an ISO standard through, and it's taken more than a year, whereas we did it in about a month or 8 weeks or something like that.
And that's because we're passing on the advice of the practices that we carried out. When we built this company, it was built around a good security practices.
We're probably a bit more paranoid than most.
Yes.
What's
focused on it.
What's a risk register? Because that's something that was new to me as a concept, and I think it might be quite a good thing to use to start off someone's thinking around their security.
So a risk register is it starts off with, which you can separate it by department, or you can have it as your whole business. It depends how strategic or tactical, operational you want to be with it. But it's a list of every risk associated that you can think of that will materialize as a result of you doing the work that you're doing. That will have an impact on the business, that will have an effect on the business. So it's a list of things that will have, if they happen, will have an effect on the business. You then, a negative effect, I should say. You then need to identify how big an impact, if that action or incident happened, how big an impact that would have. And then the likelihood of it happening, and then you give it a score, and that is your. And then after you've got your score, you then decide your risk appetite, which is at what level of score do you start to need to do something about that risk or that event, and then you mitigate the risk in any number of ways that there are to mitigate a risk. There's about 4 or 5 different ways to mitigate risk. And then after that mitigation, you reassess your original formula. So the probability will remain the same, but the impact should be reduced because you have mitigated the risk, and therefore you give it a new score, and you have to see if that new score is below your risk appetite. If it's not, you mitigate again. If it is, you move on.
Let me give you a couple of thoughts whilst I've been thinking of some scenarios whilst you were explaining that. So one is that we drop a cup of tea onto a £20,000 server and that's pounds as in money, dollars, not weight, in the server room, and blow it up. So we lose lots of data, we lose lots of expensive hardware. And another threat might be our office is quite near to some stables, so some ponies walk past us and horses every so often. We've even got special traffic lights for the pedestrians, which are extra height so people on the back of the horses can touch them. But what happens if, as we go out to buy our lunch, we get kicked to death by a horse? So those are two threats.
Okay.
How would you
let's
assess
talk about
those?
So let's talk about the cup of tea in the server room. So we've identified that a server failure will have an impact on the business, and it would be damaged if liquid was spilt on it. So the impact is high to our business. The probability of a drink being spilt on it, let's say it's medium, when we got a risk score which is high and medium, which is medium high, and that is not acceptable. So we want to mitigate that risk. So we would sit down as an organisation and go, right, we want to mitigate that risk. So what are some of the ways you can think of mitigating the risk?
I could put plastic coverings on all the servers.
Yeah, absolutely.
I could ban drinks from the entire office, from the building.
Ban drinks, yeah.
I could ban drinks from just the server room.
Yes.
I could ban servers. We just don't have any computers anymore.
Well, yes. You have to still be able to do your business.
Well, yeah. I mean, I guess that's another variable, isn't it?
Yeah.
Is business continuity.
Yeah.
What else could I do? We could ban people from going into the server room.
There's a lot of banning. Yes.
Make it like completely. Yeah. Ban everything. Ban business. Make it kind of a largely remote access kind of facility.
Okay, yeah.
So even if one person does have to go in every so often, the chance of them dropping a drink on a server is lower.
Okay, because there's less frequency of people in there.
Yeah.
We could buy another server and have it to plug in when the drink gets dropped on.
Like an insurance policy almost.
Or we could just insure it with an insurance company.
Yeah.
And so when the drink does get poured on it, we just claim our insurance and get a new. So there's a number of ways there. So we now need to work out. So we've got some great ways of mitigating that risk. We now need to decide which one's most appropriate out of those possibilities for our business.
It's probably not banning servers, is it?
No, not going to be ban servers. And are we in the business of just buying spare equipment just in case?
The planet doesn't like that.
No, and nor does the bank balance particularly.
It kind of feels like banning drinks from the server room is
moderately
useful.
Because one of your first suggestions was like wrap it in plastic.
Yeah.
But of course we've got a problem there with temperature control and access, because you plug things in and out of it.
Oh, it has to be turned on as well, the server.
Yes,
yeah, okay.
yes. So banning drinks or banning any liquid, food or drink from the server room is a practical, achievable and appropriate mitigation measure that we can enforce. A very little impact, very little extra resource allocation to us as a business. And so that, in our risk register, is our mitigation. So we've gone from a medium-high risk, mitigated it. We now look at the impact and probability again. Now, the impact of a liquid drink falling on the server and damaging it is still high. But now the probability of it happening, because there's no drinks in the server room, is now low, which brings our overall risk score down to medium or medium-low. And that is below our risk appetite level, and therefore we can move on.
We might still want to back up the server because other liquids could get involved. So let's say that there's a flood. This has happened in a company where I worked, where the server room was in a basement and water made ingress. So you might still want to insure your server, or you might still want to back the data up or have a spare somewhere for other non-tea related incidents?
Well, yeah, that's another line on the risk register.
Okay.
Yeah.
Okay. What about the ponies?
Right. Okay. Yeah. So you're outside. What was it? You're outside going for lunch.
Yes.
And a pony kicks you.
Yeah, it's startled by my keen fashion sense and decides to kick me.
So the impact of that to the business
Minimal.
Is it you getting kicked in the
Yeah,
head?
no, it is. It's me. So I think it
right.
would be significant.
So impact is high to the business. The probability, though, what is the probability of you out and about, walking around, getting so close to a horse that...
And my mum always told me not to stand behind them because they kick.
Of getting kicked in the head. So is it, what would you say
I would say that was low.
Okay, so when we look at the overall risk score, we've got a high and a low, so it's medium. Now we then sit down in business, go, are we happy with that? Are we happy that there's horses out there? We just crack on. Or do we go, well, a medium risk level, we should have a think about some mitigation. So let's have a think about how we might mitigate that risk.
Could wear a helmet.
Yes. Yep. You could wear a helmet. I mean, you've got no guarantee it's going to kick you in the head.
No,
yes.
But I think that's probably the worst place they could kick.
Maybe, yeah.
You could go and get me lunch every day.
Yes, we send someone out to get lunch. They could get kicked.
Yeah. We move the office somewhere else.
Yes, move the office away from the stables. Yeah.
All of these mitigations seem out of proportion to the likelihood of it happening.
Okay, yeah. So this is good. And when you go through mitigation measures, you have to make sure that they're appropriate and proportionate to the threat level. Otherwise, you'll end up spending too much time, effort, or money mitigating too far.
So I think there should be a policy of not standing behind horses.
Okay, or you could just have education. So when staff arrive here on their staff briefing handbook, we have to talk about health and safety anyway. When we're talking about
Just imagine the horse section of those slides.
We have to talk about lifting and trip hazards and all that good stuff. Which we do anyway, and it's available in the staff handbook and available on our interweb. And the fact that we have horses walking around outside should be part of that. And therefore we've educated the staff that therefore when they walk out and get their lunch, they see a horse, hopefully they'll remember their training.
Scream and run at it, shouting.
Yeah, and then they won't walk near it, and therefore we've reduced the probability of them being close enough to be kicked. Then we relook at the risk register. Impact still high, probability reduced. Now it's a low risk, acceptable, and move on to the next one.
So once we understand how a risk register works, we could probably talk about some of the common likely high impact threats that every business faces and give some general advice on that.
Yes, absolutely.
When you read articles about common cyber threats, you often see things split into groups like malware, ransomware and phishing. But in many cases these can all be part of the same attack. If someone sends you a link that downloads ransomware onto your system, you have all three covered. Ransomware is definitely a type of malware, and the email that you receive with that link is a phishing attack. Now Hiscox, which is a pretty well-known business insurer in the UK, they've published a guide to managing risks some years ago actually, and interestingly even in 2016 they had cyber threats as the number one issue. But we cover that quite a lot, so I thought it would be interesting to look at some of the other things that they talked about. So from their perspective, other common threats to businesses were poor cash flow, hiring the wrong people, developing a poor reputation, getting sued, and physical crime such as burglary. Well, anyone who has started a business knows that cash flow is crucial. It's the thing that they say when you read any guide about setting up a new business is write a great business plan and watch the cash flow. It's crucial, but it's also potentially very boring, because if you're an executive in a large company, well, somebody else is probably worrying about that side of things anyway, unless you're the chief financial officer, the CFO. And if you're running a startup, it's possibly the most important thing, but you want to focus on your cool new idea and get investors hooked in, or get customers, depending on what kind of startup you're in. And if you're running a small business, you're probably killing yourself keeping your customers happy and finding new ones. But forecasting, invoicing, and saving money, they're critical. So imagine the following real-life scenario, because this was me a couple of years back. You only have so many hours in the day, and you need to send out a dozen invoices, which will bring in enough money to keep the business going for another 3 months. You also have back-to-back calls with customers and potential new customers. And let's say that you enjoy that part of the job more than invoicing. And then you also need to run the payroll for the month, because it's too early to have a finance team and you don't want to waste money outsourcing because that's really expensive. So given that it's Friday and you have to do all of these things, how do you prioritize? Well, the calls will bring in more money and they will increase your reputation. Or you'll lose your reputation if you don't take calls often enough. The invoicing is boring work and gets in the way of business development, the calls you're going to take. And then the payroll, well, if you don't pay the staff, then you are dead in the water. So the real answer, which won't really appeal to very independent-minded people who are trying to do it all themselves, is to work with the right people who you can trust to do the things that you shouldn't, like invoicing and payroll. The business risk of taking everything on yourself is massive, and it will drive you mad. And this is true whether you're a startup CEO or a manager at a large company. And I've been both, and I have to say that learning to delegate and trust people can be a real challenge. So my only useful advice here is to try it and see what happens. Just bite the bullet, because in my experience, you'll be pleasantly shocked. And if you're a good leader, you'll experience this really weird feeling you get when you hear people talking to others using your own words and phrases. Now, speaking of staff, hiring sensibly is tough, but worth the hours that it takes. And if you can delegate that as soon as possible, so much the better. Hiring people can be very time consuming. And also consider that if you're the CEO, you may not be working directly with the new people, the new hires, but your current staff will. So picking people that you personally like might not work for the others in the office. Having a happy team is critical. It's not quite as critical as cash flow perhaps, but you will have less staff churn if everyone is happy. And it saves you time and money as well. Now, reputation was another thing that Hiscox brought up, and it does matter a lot. No one wants to work with horrible people. Sometimes they're forced to, and we in the security testing industry, we've seen what happens there. Unhappy customers, and also massive opportunities for new entrants to step in and attract the business with good ethics and accurate work. So how do you monitor reputation? Well, it depends on the type of business you're running. If you're consumer focused, then online reviews probably matter. We don't do a lot with consumers, so when we see silly comments made on various online forums, we have a strategy to let the slanging match play out and then drop in some facts at the end for historical purposes. So for those who find the threads in a year or two, they can see that you had a point to make, and perhaps the lies were lies. You can't convince people who are sure they're right, so the people having the fight, it's kind of pointless trying to convince them. But you can go on the record as challenging their accusations. Business-to-business ventures, which we largely are, they probably don't need to worry too much about forums, but you do have sites like Glassdoor. They let employees rate their employers. So you might find that a poor reputation on a site like that might cause you to struggle to hire new people. Now, legal threats are an issue for every company, I would say. It's really hard to give proper advice on this other than to say that it's okay to make mistakes. It's when you try and cover them up that things get tricky. Now, I've been involved in helping out with some significant litigation in the US, possibly the world's most litigious location. And having been interviewed by the DOJ, the Department of Justice, I can honestly say that you just want to avoid all involvement where you can. Also bear in mind that lawyers and law enforcement, they use completely different language. They have their own jargon. So again, depending on, regardless of which industry you work in, I would speak to them like you would almost a 5-year-old, because otherwise your words will be misunderstood. I'll give you a quick example. In the testing world, if we do a test, we then share results and people get to challenge them. We call it the review period. But in the industry, it's generally called the dispute period. So we all talk about people having disputes and disputing results. Well, in the legal world, that's usually down to breaching contracts. If people are disputing something, it means something completely different. So you can throw around a word casually like dispute, and to you and I it might mean one thing, but to them it's something much more serious. So try and simplify. Also, the DOJ generally don't know what viruses are, computer viruses, so that was an interesting education. But basically, be good, be honest, and save a few 100,000 of your Western currency just in case. Now, insurance is an age-old way to mitigate threats, particularly the ones over which you have very little control. So, fire, theft, and tax investigations. But what about cyber threats? Well, cyber insurance has been on the horizon for ages, and we're really only just starting to see companies taking it seriously.
It's difficult though, because is it going to cover me from a ransomware attack? Well, surely that's illegal because you're paying a criminal.
Yeah, there's ethics and legality, but we also know, don't we, that people do pay through security companies and law firms. They pay kidnappers, don't they?
They do, but my question is when do you bring that into the mainstream of insurance? We've got a policy to pay ransomware attacks. Isn't that just going to encourage more ransomware attacks?
I don't think they need much encouragement at the moment. But yeah, it's a fair point.
And is it going to discourage the companies from sufficiently protecting against them if their risk mitigation is transference of risk to insurance?
If you were an insurance company as well, how would you... I wouldn't insure anyone to not get ransomware, because the amount they could claim could be horrendous, if the whole business is taken down. And how do you tell that a company's hack proof?
Yeah, and we're kind of talking in the dark here, because I've not seen the details of any cyber insurance policies. But if I wanted cyber insurance or insurance against being attacked, my business being attacked, I'd want ransomware covered. But it seems like it's such a unattainable beast, because like you say, like the figures that the criminals could ask for could range anything from $5 to $5 million. Where's the...
Are you insuring to be able to pay the ransom, or are you insuring for your business loss? So let's say you don't pay the ransom, because we're not going to. It's against the law. It's against our principles. But our business worth $10 million has just completely gone because all our files are encrypted. Isn't it the business loss that you might claim?
I think you might have hit on something there, and that might be a more secured, perhaps the wrong word, but a more robust way of protecting your business continuity against the ransomware attack. If you have a number of lines of security, insofar as you've got the insurance to pay for business loss, but you've also got sufficient backups, and so as soon as you get a ransomware attack, you switch to your backups, which take you to yesterday, let's say, or last week, depending on the turnover of your business, and you're insured against the period of time it takes for you to bring those backups online and for the work that you've lost in the period that you haven't backed up. And that's your insured delta.
And that's what the insurance company will want to see. Have you got backups, and are they maintained and kept away from harm?
Yes, they can't be included in the same in the same attack.
And then you've got in cyber insurance for other threats like theft. You know, you've got your vaccine formula that's now been stolen by some other country.
Yes, that was a big thing. Also, attacks against the COVID vaccine manufacturing companies at a national level, I guess, because the global rush to get vaccination out and be the first country to be vaccinated and get their economy back on track.
Yeah, God, I wouldn't want to be an insurance company that was insuring a country for economic losses, because that would be billions, wouldn't it?
Is that a thing though? Do you insure a country?
Well,
you can insure companies, I guess, but an entire country, I guess that's just they just all borrow money off each other.
Well, yeah, and then they never pay it back.
Yeah, exactly. yeah. So, but there's a number of reasons why you should get. I think you could reassure yourself and any investors about business continuity by getting cyber insurance, because it's in the same way that you get insurance about having a flood in your building or a fire or anything like that. You just need to cover the difference that it's going to take you to get back up on track. Yeah.
We have, in the not too distant past, talked to some major insurance companies, haven't we, about cybersecurity insurance? And the theme that came out of those meetings was insurance companies are all based on metrics and how likely it is a ship is going to sink and all that kind of thing.
Yeah.
But no one knows anything about cybersecurity. It just hasn't been around long enough for them to work it out.
Yeah, there's just not enough data to churn through which they can draw patterns from, because it's just there's so many different variables.
It's like a casino, I suppose, where they have worked it out so that you feel like you've got a good chance, but you really don't have a good chance.
Mm-hmm.
And insurance companies have got it worked out so you think you're getting something, but of course, in general, you're not.
Yeah, your general house insurance. You think you're getting a good deal paying a couple £100
£300 a year or something.
A year. But they know how many houses actually get burnt down or flooded in the country a year. And they know the chance of yours actually happening to you is so minute that that's where they get the big money from.
And then you get stung with the what do you call it? The excess.
Yes.
Because I had a fence blown down once in a really strong storm, like we're having now.
Mm-hmm.
And the excess meant that even though it was £800 worth of damage, it really wasn't worth me claiming, because I'd get about £500. And I'd then pay more on my premium for every year after.
Yeah, it's questionable, isn't it?
Have you seen Outnumbered?
Oh, the sitcom thing on the BBC.
Yeah, the British sitcom about a normal family. Mm-hmm. And I can't remember what happens. They lose something gets damaged or lost, and they think they're going to claim for it on their insurance. I think a stereo's stolen, and it's like a £400 stereo. And they realise that their excess is about £250. I've got the figures wrong, but essentially they'd make about £10 once they paid the excess.
Yeah.
And then they start thinking, well, what about all those other things that we didn't claim for because, the excess was too much? Maybe if we add those all up and make one claim, then morally it's not too bad. But of course it is wrong, isn't it? And their kids pick them up on their hypocrisy because they're telling their kids not to download music because it's stealing.
Stuff, yeah.
And then the kid's like, well, defrauding an insurance company, isn't that a bit like stealing?
Yeah. But it doesn't feel like a fair relationship, does it?
No.
You're paying to have protection against loss, and then when it comes down to it, you're actually forking out a lot of it. I guess it comes into its own when there's large payouts, and your few £100 excess is insignificant in the cost of an entire building or your business turnover over a period of a month or whatever it takes to get back on track.
Well, I mean, the difference is, you and I have paid house insurance, buildings insurance for years, and yeah, thank goodness nothing's ever burnt down. So for us, it's been a waste of time.
Mm-hmm.
But then on the Grand Designs episode, as a TV home building thing, this record executive and his family were building a cottage, and he stopped paying the buildings insurance, and it burnt to the ground, and his wife was furious with him.
Yeah, but then that all comes down to risk appetite. So as an individual or as a company, you have to sit down when you produce your risk register and understand what your risk appetite is. So we all know how to generate risk, probability and impact. That isn't a new formula for anyone. But when you get a number at the end of it, whether it's 0, 1, 2, 3, 4 or 5, where as a business, what number do you start having to mitigate, or do you just accept the risk? Because that is one way of handling risk, just accepting it.
Well, think as well about our friends in San Francisco. When you have a house in San Francisco, you have a choice. You can have earthquake insurance or not.
Mm-hmm.
And the price of earthquake insurance is hair-raising. It's humongous. And the problem there is that there will be an earthquake and it will damage lots of houses once every however many years.
Yeah.
And when you count up the cost of rebuilding your house, let's say it's a 10-year period. Like if it costs you £1 million to rebuild your house in San Francisco, the insurance will cost you $1/10 every year. So it's kind of like, do you pay in instalments in advance?
Yeah. In effect, you're paying in instalments, because the other way of managing insurance is to not pay the insurance company, but you still save the money.
Yeah.
So as a business, we could say, okay, well, there's a chance that we could have a cyber attack, and that would stop our productivity for what is likely to be 2 to 3 days, because we've got some technical skills, we know we've got backups in place, all this kind of stuff. So I reckon 2 to 3 days if it's bad, and so we would need a pot of cash to draw on, and most people draw on the insurance claim. But if we, instead of paying the insurance premium, had just been putting that money into a pot, then we just draw on that pot. So there's no excess, it's our cash.
Yes. So going back to cyber insurance, their issue is that they're the casino, but they haven't worked out the odds yet. So they can offer us insurance deals, but they still don't know yet if they're going to come out ahead.
Yes, they don't, and so they err on the side of caution, of course. And so I would imagine the premiums are quite high.
And I would imagine the small print is going to be vicious
quite
as well.
Long, yes. Yeah. And it comes down to, because there's so many different ways that you could be attacked. I guess it's down to the level of impact that it's had on you.
Yeah, I mean, we had an issue, didn't we, a few months ago, where there was a power cut and it knocked out lots of equipment, and some of that equipment didn't come back again, and it cost us, a few quid to replace those switches and things.
Yeah.
But then, to mitigate against it happening again, we spent thousands of pounds on uninterruptible power supply equipment. Yeah. So yeah, it's like, well, we kind of bought our own insurance there, and it means that the guys don't have to spend time fixing things and rebuilding things.
Yes, that's the way that we've mitigated that risk. We've identified, well, when we first moved into this office in the UK, the mains power supply is reliable. Yeah. It's constant and reliable, and we didn't feel like the likelihood or the probability of power cuts happening was high enough to warrant any more mitigation than just relying on the power company. But then we've had more power cuts here than we would have had. We've experienced anything before. We've had financial impacts from hardware as a result. And so we've reassessed our risk register. And for continuous power supply, the probability, likelihood of it happening is now gone up. The impact has stayed the same, but that's high anyway. And it's brought the overall figure for that formula up to a point where it's past our risk threshold and appetite, and therefore we needed to mitigate. And we could have done that in a number of ways. And we decided that we were going to invest in uninterrupted power supply.
Some might say we closed the barn door after the horse bolted. We waited till we had a problem before we dealt with it. It's like you get robbed and then you put the CCTV in. But everyone's got limited resources, haven't they? Security has a cost to it, and you can't start out as a new business and put everything in. You've got to judge what's the most impactful thing, what's the most likely thing, and what can we afford.
Yeah, I mean that's the reason why you go through this process of assessing risk, because it would be crazy for you as a business. It doesn't make any business sense to be investing money in mitigating risks that just simply don't need to be mitigated. You've got to prioritize, and you've got to understand where you need to focus your efforts. Otherwise, you'd just be chasing your tail of all kinds of random things.
Yeah, I mean, when we started out, we thought one of the major risks would be a security company in another country suing us for testing them without permission. And, touch wood, we've only ever had one threat of that, and that didn't come to anything.
And that came from a country where litigation is far more prevalent than it is here in the UK anyway. And so I think it's probably less of a dramatic event in that country.
Oh, what, for them to make a threat? It's
yes.
like, whatever, then we'll have a cup of tea and threaten
fine.
someone else.
Yeah. It's because it's more part of a general conversation, whereas it's more rare here in the UK, and therefore when you receive a letter like that, it has a bigger impact, I guess.
Yeah, one big difference I hadn't realised, because we went through some litigation through our involvement with the Anti-Malware Testing Standards Organisation, where it got sued by one of its members because the member claimed some antitrust nonsense. And what I didn't realise is in the States, you can get sued for something and then you can win, but you don't get your costs back. You have to then sue the other person for your costs, and so the costs keep rising and rising. It's almost never ending.
Yes.
Whereas in this country, if someone sues you and they lose, you can then claim costs off them without having to have a whole nother suit.
Yeah.
So for us, my point is, for us threatening to sue someone is more significant because it can come back on you quite fast and hard, where it seems like in America you can throw these things out there fairly secure in the knowledge that for years you're never going to have to deal with a loss.
Yeah.
Please subscribe, and if you enjoyed this episode, please send a link to just one of your close colleagues. If you want to join the Decoded community and access private content, including our monthly executive briefings, apply at decodedcyber.com/circle. And that's it. Thank you for listening, and we hope to see you again soon.